And good morning, good morning, good morning. Welcome to another episode of Money Matters. I'm Nev, your host, and today is very, very exciting news. I do want to welcome everybody who is watching this live. Hey, feel free to say hello. There's a chat somewhere on the page, or at least there should be. Feel free to say hello, ask any questions, introduce yourself, tell me what you're tuning in from. Whatever. You can put whatever moves you and makes you happy. So if being nice makes you happy, hey, be nice. If being rude makes you happy, then hey, be rude. I guess it is a freedom to be who you are. Today we have very, very important news and episode. We're going to be talking about crypto. We're going to be talking a little bit about Bitcoin. We're going to be looking at some of the most important news, and that is the new thing that IMF has issued out to all of the other central bankers, and it basically says we need to rethink your reserves. So we're going to be taking a look into what actually they have put out, and does that mean that now the banksters will be hodling onto Bitcoin in their reserves? It's potential, but let's take a look into what's going on. We're also going to take a look into some of the hacks that we've been seeing, what's happening in the news around the world when it comes to Bitcoin and other altcoins. We're going to be taking a look at all kinds of cool things. So it's very important, timely information. We do it super early in the morning so that you get it right on time, so you have time to actually act and benefit from the news that you get here and information and stuff. So super exciting stuff. We're also going to be talking about the hedge funds entering Bitcoin and what actually that means for you and I and the rest of the hodlers. So it's a very important thing that I think you're going to need to understand, especially as we start entering the new era of Bitcoin. So I do want to welcome everybody who is watching this live. I want to welcome everybody who is joining and watching this later on in a replay. And of course, welcoming everybody who is listening to this in one of the podcasting services. All right, y'all, let's do this. And there we go. Good morning. Let's go ahead and take a look at the prices, what's happening in the market. And as you can see, Bitcoin is still holding really nicely close to that 23,000. It keeps flirting with it. I'll be very honest. Right now, it's standing at $22,862.86. It's slightly down for 24 hours, but it has pumped tremendously over the past few days. So a little bit of down, little bit of sideways, actually a really, really, really good thing. Ethereum is currently trading at $648.54. It's down about 2%. Again, it also has done really nicely as well. XRP is up at 3.1% in 24-hour period, currently trading at 58 cents. Tether is Tether. Litecoin is up at $108.60. Bitcoin Cash is up at $315.55. Sorry, it's down for the day, but it is up over the 7 days. Link is basically what I gained over the last 24 hours. They lost, and so now they're still at $13.60. Overall, kind of sideways market. We do have some winners. Of course, there's a new kid in town, GRT, the graph. And the graph has actually gone ballistic. It's up 102.1% in 24 hours, 20.4% in 1 hour. So brand new project coming in. I don't know much about it. I don't know actually anything about it, but hey, it might be something that you can potentially look into. I know I definitely will. EGLD is up 19.3 in 24 hours. DCR 16.4 up. SNX 12% up. BAT 8.2 up. Dodge, yes. The doggy is coming back on at 7.8%. LTC is 7.7. Zilliqa 6.5. So quite a few projects that have gone up. Mostly, as I said, sideways market. On the losing end of things, no big losers whatsoever. The biggest one would be ESD at 13.3. Waves at 8.2. Yuma at 7. Kusama at negative 6.1. Ocean negative 5.5. Band also 5.5, EWT also 5.5. So 5.5 seems to be the good kind of going down sort of thing. So as you can see, not much actually on the good side, the bad side, or any other side of the crypto. And I think it's very, very important for us to acknowledge and understand that. So let's take a look at some of the important big news of what's going on. And then we're going to go in and dive deep into what is it going on with the central banks, the IMF, and all kinds of other stuff. So some of the biggest news that you may or may not know about is that the Coinbase is filed for an IPO. Yes, that Coinbase, the guy that you go in and you press the little button to go buy your crypto or sell it or transfer in or out of. Yes, they are actually filing for an IPO, and they're saying that they could be valued as high as 28 billion, but we'll see how that is going to turn out. Bahamas is rolling out its own CBDC called Sand Dollar. That's right. So it's coming out, and so far, well, it came out. It's not coming out. It came out. It's out. Congratulations, you came out of the closet. Thank you, and congratulations, Bahamas. But yeah, it's already rolled out. And, the news are coming in. They're very positive, saying, hey, this is pretty simple, pretty easy. It's just a matter of folks adopting it. And so right now, everybody can use it. So it's really about the adoption piece. And then we also have information that Christopher Woods, head of equities at Jefferies, trims his gold exposure in favor of Bitcoin. Yes, the Bitcoin train has left the station, and it is going chugga, chugga, chugga. At times faster, at times slower. There are some warning news and information that you need to understand, and that is that it could potentially go down in price, and you probably should be aware of that stuff. So right now, let me see if I can share my screen again. You can see what we're looking at is a daily chart of Bitcoin. And if we take a look, let's change it over to like an hour. There we go. This is what I wanted to share with you. So as you can see, we have kind of come up. Now we're going a little bit of sideways, which is a good thing. It's a very, very good thing. The RSI has actually dropped from this like very scary 80, 90 level down to much healthier 50s level. And so, of course, right now we are seeing, and what you're looking at is 1 hour candles. Let me see if I can make this slightly smaller. And as you can see, we have a sort of a sideways channel, and within it, we are creating this almost like a triangle pattern, wedge pattern. Sorry, not wedge. Yeah, wedge pattern that is coming in, that it's going to help it break on the upside or the downside. I do think that we're going to be breaking on the upside, but again, I could be wrong, so please don't just decide that you're going to do something because, a random dude on a YouTube had said so. As you can see, we're kind of going up and down, kind of going between it, flirting around with it. Every time we approach this area over here, we seem to kind of go back up. We'll see how it's going to turn out. I do think that it has a very strong potential to go into the upside, but it wouldn't be unheard of it going to the downside, and you need to understand that, okay? You need to be prepared for that it could dump, 20 to 30, maybe even 40% on the downside. And if we follow the Elliott Wave, which I really think that Bitcoin follows really, really nicely. And if you don't know what it is, look it up online. I know you know how to do that. So it's right now we're basically just completed the first up and down. We're now, in my humble opinion, on the second up, and there needs to be a down. It's so I do expect that in a relatively short time. Does that mean today? Probably not. Does that mean within the next couple of months? Definitely yes. The probability gets even higher the more time passes, that we're going to see this 30-ish% dump. That could be a great time to actually go and buy, because after that we're going to enter that third and final wave up for this bull rally. That is going to be incredibly amazing. That's that part where they're talking about, hundreds of thousands of dollars per Bitcoin. And so we might have an opportunity to actually buy it, again, at the $18,000-$19,000 level. I don't know if it's going to happen, but I'm saying there's a potential. For me personally, I think that would be kind of cool potential to go and buy in, just because of I am very convinced of where this is going, and it is going to even higher Bitcoin. So even if you think that it's very expensive at 23,000, it's not. It is dirt cheap, and I'll share with you in a bit of what I mean. But now let's go in and cover some of the other important news. Bitcoin exchange Cefalo or whatever you call it raises 1.3 million for planned 2021 IPO. So as you can see, not only are the companies that are now within crypto have been in crypto and doing really well, now they're actually starting to kind of cross-pollinate and get into the regular equities, and we're seeing regular equities get into the crypto. And I think soon enough we're just going to have this one beautiful market, but that's going to be a while before all of that happens. How it's all going to play out, I have no clue, honestly, but I do see it kind of happening. We did have another flash loan attack, and this happened at this point to Warp Protocol. They just lost $7.7 million in the attack. So of course it was a flash loan attack, and victim is lending protocol Warp Finance, which lost 7.7 million worth of stable coins. The attack resulted at the loss of 3.85 million DAI and 3.92 million USDC. The incident wasn't too different from other flash loans attack in the DeFi space. The attackers supposedly used multiple flash swaps to 3 liquidity pools on decentralized exchange Uniswap, one for every wrapped BTC, USDC, and USDT, along with 2 loans from crypto trading platform DYDX involving Ether and DAI. And of course, Warp did issue users to not deposit any funds because they were noticing some irregularities in the system, and they put out the notice. However, it was too late. Some of the folks actually ended up putting in money into it anyways. And then, of course, what happened? Well, they lost money, and there's one user that wrote, quote, "Please help me. This is the first time that I use DeFi. I had invested 40,000 DAI in total. This money is all my savings. I can't live without it. Time out. If this is you, I'm going to be rude right now, but I'm going to call you an idiot. And hopefully you're going to be an idiot that is willing to learn. If you've never, ever played in DeFi, why in the world would you deposit all of your money? Why? Explain it to me. Why? Why would you do this? This is stupid. This is stupid. I'm sorry. You are an idiot. You deserve to lose your money. I know that sounds really horrible. It sounds really harsh. And you know what? I'm probably going to catch some sort of something on the comments for this one. But I truly believe it. If you don't know how to use something, you don't jump all in, and you definitely never ever invest every single thing that you have that you can't live without. Hello, all my savings I can't live without. That is not how you invest, y'all. That is how you get wrecked. Okay? That's how you get wrecked. So that's a one-way ticket to a wreck city. Goodbye. Done. When you are going out there and you're brand new and you're going to invest, then you're going to go into something that has much higher risk than something a little bit safer. Okay? Number one, you don't put in all of your savings. Okay? You put in only money that you can afford to lose. Yes, I know it sucks, because when you gain really beautiful gains, it's not as much, right? Like a 20% gain on $100 is only $20, right? You're like, but 20% gain on $10,000, you're like, all right, now we're talking much nicer, right? However, if $10,000 is the only money you have, if you lost it, you're going to lose everything. You're going to get yourself, pardon my language, but screwed. So part of the investing is not necessarily just what you can make. Part of the investing is understanding you want to actually recuperate your money first, right? Preserve your wealth is number one goal. Then grow it. Then grow it. Because if you don't preserve it, if you lose it, then you got to go and start from scratch. And that's much harder, okay, than preserving it. So you never, ever, let's all learn on this person's, I mean, I feel horrible for them. I truly do. But at the same time, I'm going, What were you thinking? What were you thinking? Hello, with all these channels that exist out there, with all of this YouTube, with all of the books, with all of the internet, with all of the people basically saying the same thing, do not put the money you cannot afford to lose into something. Why would you do that? Well, I know why. I know why, because we let our emotions run high and we invest in an emotional level. And you know what? Intelligent investors exploit that. And I will explain to you exactly how and why that is. And that leads me into this beautiful and amazing and really big and important story that has to do with hedge funds entering the crypto space. So, of course, we have now the hedge fund sharks and the Bitcoin whales. And unfortunately, the whales will get wrecked. And it's not just the whales, it's everybody. So, of course, we've seen the boom coming in. We've done pretty amazingly over the last 24 hours, 36 hours, 48 hours. Bitcoin has been on the rise. We have been doing amazingly well. And, of course, the boom has been powered by a combination of the Federal Reserve unyielding support for the U.S. economy, which has led to weakening U.S. dollar and institutional investors' use of Bitcoin as a hedge. And not just institutional investors, but intelligent investors around the world. A new type of investor has started appearing in cryptocurrency waters, the hedge fund sharks. That's right. And when the sharks show up, well, guess what? Blood will hit the waters, and they will bring with them potential for increased market volatility on the up and the downside, and you need to be aware. Now, the majority of day traders were betting on their own money, right? The hedge funds, well, they bet the money of the rich, and what is really important is that they don't actually report too much of anything. It's a high risk, high reward game. They don't have any red tape. They don't have to report much of anything. It doesn't function like a mutual fund where they have to get all of these permissions and stuff. Like, they just go and do what they want. And, they are here in this article. They're quoting of what happened with the Big Short, right? The gentleman that was playing Michael Burry, right? That he was basically a hedge fund manager, and he could just lock you out of your money and be like, nope, you can't withdraw it. It's my money now, and I'm going to do whatever the heck I want. And that's exactly how these games work. Pure hedge funds aren't encumbered by regular red tape. They're considered a high-risk, high-reward investment vehicle for not of the faint heart. Bitcoin whales, those that hold at least 1,000 Bitcoin, basically buy Bitcoin. They hodl it. They wait for a price to reach a certain threshold, and then they sell it. That's basically how they operate, right? Now, hedge fund managers tend to thrive on volatility. A typical toolbox for them includes things like long and short positions, where they place both long and short positions on competing assets. Arbitrage, where they buy it at one price, typically lower price, on one exchange and then sell it at a higher price on another exchange if they're betting on the long position. If they're betting on the short position, then they go the other way around, right? You sell it over here higher, then you buy it over there lower, then you come back and close it. So arbitrage is another one. Global macro is another way of how they bet, and this is the big bets on the prices based on the macroeconomic trends. Right now, if you're entering into the Bitcoin space and you're saying, hey, I'm going to buy and hodl it for the next little while, you are betting on the macro component of things, okay? If you're going out there and sort of buying on one exchange and selling on the other exchange, you're playing the arbitrage game. The most notable hedge fund strategy for Bitcoin is quantitative analysis. This is the momentum chasing robots that are basically built that go in and trade on algos, right? These strategies build models using mathematical and statistical models to make assumption based on where the price will go next. And one of the interesting things that when they're looking to build these things, they use quants. Well, quants are these statisticians or mathematicians that actually, are commonly referred within the trading space because they basically use the price of anything, and they love Bitcoin, they love retail because we are highly emotional creatures. We put in all of our savings into something we've never done that is super high risk. We don't even understand, and then they go cry saying, please help me. Somebody, anybody, give me my money back. It's gone. Somebody took it. Ha! That's a highly emotional way to do anything. And quants, well, they explore that, and they understand that the Bitcoin price is a very interesting one because it is based almost entirely on sentiment. Whereas stocks, actually, a lot of the hedge funds are within it, a lot of institutions are within it, there's a lot of bots within it, so not a whole lot of emotions. Well, there's some, but not as much, right? Whereas Bitcoin is still a very pure market in many regards, and so it's much more emotionally driven market. So of course they love it, and they believe that humans, in particular traders, behave in a way that can be modeled. So, for example, when the U.S. Stock market tanks, everybody gets out, which means price is going to continue going down, and they're going to pile into something like gold, which means the price is going to go up. So understanding that, they basically make money on both ends of the spectrum. Quants like whales and the rest of the crypto hodlers because they tend to behave in similar fashion, and they can model the profit from that behavior, right? We've already been talking about it. As soon as you reach that $20,000 level, well, guess what? Whales are going to sell. What does that mean? Price is going to go down. How low it's going to go? Nobody really knows, but it is going to happen. So hedge funds basically can use this and cover their losses through hedging, and they will try and run calculations on how much an asset swings by over a given period of time in order to give themselves sort of that trading kind of room of like, where's it going to go? And when it hits this, I know it's going to come back down. When it hits this bottom, I know it's going to go back up, more likely than not. And so they kind of go in and set their parameters and then let the bots do the thing. Invictus Capital, for example, studied Bitcoin price movement for 2 years before building its Bitcoin Alpha Fund. With the data, it can then create fail-safes that protect investors from aggressive downward swings and create a buffer. And then, of course, they can let it ride wild on the upside of the things. Quants often use high-frequency trading, HFTs, to eke out those profits. And, of course, that's what's happening right now in the equities market. They have these high frequency traders, and of course that's how the long-term buy and holders are losing on the money. Now the Bitcoin market, the crypto market, is still pretty new, is still pretty healthy. There's still plenty of room to go, but as folks come in, please, you want to understand that it is going to be highly manipulated in the upcoming years, and it's not going to take forever for all of that to happen. So you got to be careful and you got to pay attention too. The problem is that they will use high frequency trading, and they will use the bots. But the bots are when they start to copy each other, that's when we start getting into the problematic waters. Because algorithms trading strategies end up evolving, and as they evolve, stability or instability of the market as a whole depends on whether the strategies are highly diverse or dangerously similar. If they're very diverse, then we have a pretty good and healthy market and everything is fine. However, when you have too many bots, too many firms following the same practices, same analogies, same, sort of beliefs and stuff, that's when we can get into incredibly dangerous and market crash components, but also these like parabolic moves that just don't make sense. And you look at it and you're like, how does this even make sense? Like I've been saying for months now when it came to equity, I'm like, how does this even make sense? Well, here is kind of how it works. You have a bot, right, on one hand, and that bot basically reads the news from another bot. Now, the news reading bot also reads what the trading bot is doing. So it's kind of like I watch you, you watch me, and as long as both of us are like sort of supporting each other and building up on each other, the market kind of keeps on going up. And imagine this is like hundreds of thousands, millions of little bots like doing the same thing, and they're always trading. And of course, when I end up buying, it signals you that, hey, there's the price movement up. So you end up buying, I end up buying more, you end up buying. Like, do you see what I'm saying? It keeps on going up. Now, when something happens that kind of spooks it, that goes crazy, that goes ballistic, that's sort of like, wait a minute, some sort of something goes in, one sells, and if it's a big enough sell, it triggers a bot to sort of report the news of like, hey, this really giant thing, like Michael Saylor bought XYZ Bitcoin, right? That kind of news. Then it goes in and it reports it. Well, the other ones sort of read and say, whoa, this thing is going down. I should probably sell some. So they sell some of their position to protect it. It hits a little bit lower. Once it hits the threshold for some of those bots that are trading, it starts the sell-off mania, and that's when you actually have these like really sharp moves on downward, right? So you have it on the upside, you have it on the downside, and that's something that we can expect to see coming into the Bitcoin space and the crypto as a whole. Of course, still early days for hedge fund quants, sharks in Bitcoin, but it is a sign of what we can expect to come. Now, an interesting piece that I want to share with you is this beautiful little map of the Bitcoin legality by country. And it gives us entire world, because we're going to be talking a little bit about Bitcoin as well and kind of what things are meaning. And look at this thing. I mean, I don't know what legal and illegal means. I mean, I know what illegal means, but I don't know what illegal means. But apparently there's legal and illegal. I don't know what it means. But you can see that the vast majority of the world is pretty legal. There are a few countries that Bitcoin is illegal. Very, very few red dots around the world that exist out there. And it's typically probably places that are suffering big deals. So is it still happening there? Probably. It's just, you just do it illegally. You just do it in a way where you don't tell others that you're doing it, right? Then you have areas where it's restricted, but vast majority of the world is basically in the green. And then, of course, we have vast majority of Africa or African continent that appears to be sort of like an unknown. We have a known up in the northern part. We have a known a little bit down into the south and eastern, little bit on the west coast, but vast majority of Africa, we don't really know exactly where they stand with the whole crypto. And then, of course, we have the islands over here in the Pacific that we're like, we're not quite sure how this is going to turn out. I thought that this was really cool, but now it's time to actually take a look and have a conversation about what IMF was saying. Well, IMF has issued a new blog that is cautioning central banks that they may have to rethink what constitutes a reserve and what they have inside their reserves. Now, they don't specifically say, hello, central banks, you should consider think Bitcoin cold, hello. They're not saying that kind of stuff, but what they are saying is that they're warning that central banks may have to rethink what constitutes their reserve currency holdings. A global lender points to the changing geopolitical landscape, technological advances, and the impact of the pandemic as events to influence the reserves. And they're saying, hey, we have some dominant currencies right now. Let's take a look at what's going on. As you can see, the US dollar is this light blue color and represents anywhere from 50% of the market all the way to like 75% of the market. Euro is in the second position. That's the dark blue across the little circles. And you can see it goes anywhere from, I don't know, I would say like 20-ish% all the way to about 35%, something like that. Then you have Japanese yen, which is the orange color thing. I would say the range is anywhere from like 2 to 7% based off of what I can see here. British pound is the yellow one, and it's slightly bigger than Japanese yen in some instances, but about the same in other instances. So again, it's going to be about, I don't know, 3 to 7%. And then everything else is kind of there. And it just really depends on the global foreign exchange trade. The others are a little bit bigger. On the foreign exchange reserves, it's like a minuscule. On the cross-border bank, it's again small, and the import invoicing and that stuff, like it almost doesn't even exist, right? So that's kind of what they're saying of like, hey, we got to rethink that stuff. And pandemic inspired advances in financial and payment technologies and will likely impact the future composition of reserve holdings. They can't say this, right? But I can. And what I think they're saying is, number one, we don't really think that the US dollar is going to continue being a reserve currency. I agree with that. Number two, Bitcoin will become part of the reserve holdings, and Ethereum might do the same thing. I don't know for sure, right? Nobody has a crystal ball. I know mine broke years ago, but I am 99.99% convinced that this is going to happen. And I mean, they're signaling it right here. It will impact the future composition of reserve holdings, advances in financial and payment technologies. They're not talking about the ability that you can Apple Pay for your groceries with a freaking phone. That is not what they're talking about, because what are you going to hold in reserves there? So they are talking about crypto right here. The IMF also reminds central bankers that simply issuing a digital currency is no guarantee of its acceptance as another reserve currency. Instead, only superior technology platforms can help new currencies overcome some of the advantages of incumbent currencies. Depending on the adoption and use of the public and private digital money, central banks might have to rethink what constitutes and how to hold reserve going forward. So this is a really interesting thing, and in my opinion, they're really telling folks, they're telling central bankers, hello, I think you need to hold the thing called Bitcoin right now. So, talking about holding Bitcoin right now, we did talk about the prices and where it's going to go. Is it really expensive at 23,000? How do I evaluate it? Like, where is this thing whole going? And yeah, I think that it's going to be basically it's not too expensive, right? Because all you got to do is just put it into the smaller units, like Satoshis. Right now, a single Satoshi is worth around 0.02 cents. Okay, so $1 is worth 43 sats. And of course, if we were to say, well, one sat should be equal to 1 penny, for example, or 1 cent, right? Where does Bitcoin versus USD price have to go? And of course, it has to go all the way to meet the M2 money supply cap, which means it would need to go to 1 million. But that is also assuming that Fed stops printing and exploding the M2 money supply cap, right? And we've seen that the M2 money supply, I mean, it was like chugga, 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 and then just kaboom in the last month or so. You can actually find that if you go to St. Louis Fred, you'll be able to find, just look for M2 money supply chart. You'll be able to find it right there. You don't need me to show you that, because you can find it. So that's how we can actually get to this sort of parity. And we've already seen that there is a parity within certain different entities, right? Some currencies have already fallen into the Satoshi parity. In July, Argentinian peso joined the Lebanese lira in seeing 1 sat equal their smallest unit of account. This is incredibly bullish for things like Bitcoin and highly bearish for the local currencies. We do know that Lebanese lira is basically failing, and Argentine peso is basically going the same direction. Turkish lira is right over there as well. Venezuela, we know that it's been suffering. Brazil is also going down the same rabbit hole. I mean, every currency around the world slowly but surely is approaching this, and it's going to hit the parity. And so that's why many individuals, many really smart individuals, are going in and buying and hodling onto the Bitcoin and the sats and buying as much as they can. They also noted that there are so-called millisats, which exist only on the Lightning Network. However, they could be used should the need arise. Now, if the need arise for us to use millisats, right, a portion of a sat, which right now is 0.02 cents, right? So it still has to like completely implode. That means that we have experienced a hyperinflation, and the US dollar is basically worthless. Like, I mean, right? Like, it's game over. Done. That's it. Like, you're done. We finished playing the game, and the new financial ecosystem has emerged, because the old one is dying. We already know that. It's on life support right now. We already know that. But when that is to happen, it's going to be basically gone. Now, right now, we are at, let's say, $23,000. For us to go to 230, that means it's going to be basically 10x to go to the million, well, that's a lot of excess happening over there. So that makes a Bitcoin at $23,000 ridiculously cheap still. And again, keep in mind that this $1 million per Bitcoin price is only based off of catching up with the current supply of M2, pending that supply doesn't increase, which is an incorrect assumption, because I believe that it is going to continue to increase because it has to. It just simply has to, because we have to try whatever we can to create this inflation thing to blow up everything that we have destroyed for a few decades now. So that means that while I know that I've been saying in the short term, Bitcoin could have a potential to be at a few 100,000, 3 to 400,000. In the a slightly longer time period, Bitcoin would be in the millions. So one Bitcoin would be worth millions of dollars, not just 1 million, but multiple millions of dollars. And at that point, the dollar is going to be worthless. So we likely won't be trading it that way. We'll be looking and saying, how many sats do you need for me to buy that car or the house or whatever, right? It's not going to be purchased in Bitcoin. It's going to be purchased in sats. So that's kind of where we are. That's the tip of the day. That is what's happening in the world. Hey, thanks for watching. Thanks for listening. Do smash subscribe, notifications, like, write reviews, whatever you can do. And hey, I will see you most likely tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.